down 44% in 2022. Is Ford Motor stock a buy for 2023? I'm going to answer that question looking at several important metrics in this video, so stay tuned. The first thing I want to look at is Ford's revenue growth quarterly going back to 2014, and you see steadily declining revenue all the way up until the outbreak of 2020, and then there was a boom in sales. Of course, car prices soared since the outbreak. Shortage of semiconductors caused a decrease in supply for cars, and then consumers fueled with stimulus checks created a boom in demand for cars, and so that's created uh, a, a a boost for sales for Ford, and revenue grew as much as 30% in a few quarters and 10% in its most recent quarter. However, I don't think this is sustainable longer term as supply comes back online, as many manufacturers ramp up output. I believe car prices are going to come down. You're already starting to see this in the used car market where prices are coming down precipitously in used car prices. The next thing I want to look at is operating income, and going back to 2014, you see Ford's operating income for the trailing 12 months. It's fluctuated, but if we go from 2014's figure of 6 billion and then we look at the most recent figure of 11.17 billion, it's considerably higher. But again, if you look here from 2020, from the beginning of 2020 till most recently is where most of those gains were. So if we exclude the big burst in profits because of the pandemic caused shortages, then its operating income would have been just below 6 billion, below where it was around 2014. So much of its boost in operating profitability is due to these shortages. And if you've been to a car dealership recently, it wasn't surprising to get quotes for MSRP for sales prices to be $5,000 and $10,000 above MSRP, where usually when you went to a car dealership they were offering you discounts to buy new cars. Now for the last 2 years you've had to pay premiums above the MSRP. That, of course, is unsustainable, and the boom in profitability also is unsustainable, so keep that in mind. If we look at the operating profit margin for the trailing 12 months, 7.36% more recently. The longer run trend is about that level, between 7% and 12% at the peak before the outbreak. So reasonable profit margins, and you're dealing with a lot of these costs in manufacturing are non-cash expenses. So to have an operating profit margin, between 7 and 15% is really good, because that's going to generate a lot of good cash flow for the Ford Motor Company. And speaking of cash flow, let's look at the cash from operations in the trailing 12 months, and you can see very nicely increasing cash flow from operations even before the burst in the pandemic, where it soared from around 16 billion up to over 25 billion. Ford was increasing its cash flow from operations nicely in the trailing 12 months. However, that has come down to 9.2 billion in recent quarters as that boom from the earlier stages of the pandemic is receding, as the company is needing to invest more in its electric vehicle output. That's going to be a headwind to cash flow from operations. Next, let's look at its dividend per share, because I know a lot of you are looking at Ford because it pays a dividend and looking at how much is the dividend per share and what's the trend like. And for Ford, from 2014, they increased their dividend from 40 cents per share to 60 cents per share and kept it there all the way until 2020, where they lowered their dividend per share from 60 cents and now it's down to below 10 cents per share annually. And this could be due to needing that cash flow to invest in its electric vehicle investment, increasing in capacity, increasing in its output. And so investors cannot really rely on Ford's dividend per share right as of right now. They may need to wait a couple of years for their output of for Ford to ramp up its output of electric vehicles to an equilibrium state, to a level where it doesn't need to invest large sums up front anymore, and it starts reaping the benefits of the investments that it's making right now. Finally, let's look at Ford's valuation. On a forward PE, it's trading at a 7.464, and then looking at the forward price, just the regular price to free cash flow at 19.73. The price to free cash flow is more expensive than the stock has been, going all the way back to 2014. The price to earnings, it's about average going back the last year and a half. So to answer the question, is Ford Motor Company stock a buy for 2023? I'm going to say no. I don't like companies that require large capital investments. In my opinion, they are very risky when they require so much large capital investment. To make matters worse, the car industry is getting incredibly competitive right now, and that's not a time I want to be investing in an industry when competition is soaring. And so for that reason, I'm going to say Ford is not a buy right now. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.